From the national headquarters for America's only foreclosure radio network, live from the Foreclosure Profit Center, this is The Source, Real Estate Radio USA.
All right, everybody, we are back. Now join us on the program. She's an expert on real estate, economics, and technology, a renowned author and professor. She's appeared as an expert guest on such places as CNN, Fox News, Fox Business, NBC News, MSNBC. It could go on and on and on. Please welcome to the program Dr. Dani Babb. Dr. Dani, how you doing?
I'm doing great. How are you?
Great. And well, in addition to an expert on real estate and technology and economics, I know one of your passions is politics.
Oh, yeah.
And I want to start it off today and talk about, with the Democratic National Convention going on right now. Of course, we're going to hear a lot from John McCain in the coming weeks. What do we have to look forward to in each of the candidates as we approach the election as it affects the housing market?
Well, I think in terms of the Democrats, we've seen a bit of that this week. I think we're going to see more of it today with regard to trying to redistribute wealth. Particularly the Democrats have a very unique policy, which is going to supposedly help up to about 700,000 homeowners, but it's going to cost significantly those that are paying their mortgage on time. And I'm consistently, routinely asked, well, how is that possible? How can you say that a government program is actually going to cost current homeowners? And any time that we force particular legislation on a private company, a public company, we're going to ultimately cost the consumer more because someone has to pay for that particular piece of legislation or that particular mandate. And ultimately it falls back on those that are paying their mortgages or need to refinance, which is quite a few of us in today's market.
Sure. And we've already been seeing that, haven't we, with the passing of this current legislation that just happened?
Yeah, absolutely. And Ben Bernanke, all the way back in March, listed at least 4 things that are going to cause some significant problems. And if that continues, along with the current housing legislation, I actually think it's going to hamper recovery rather than help it. We need to keep the government out of legislation in terms of mortgage lending, and so on, and let the private market actually do its thing and do what it's supposed to do. One thing that's kind of troubling is reading over McCain's home plan. I wish that he'd kind of jump on a little bit more of a conservative bandwagon here. He's requiring 5 basic things to be eligible to refinance, which would force a lender to do loan modification. And I am personally not a fan of forcing private companies to do anything if it's not in their best interest for viability.
Why is that?
Well, we have organizations that are required to do things by the government, regardless of what it is, run into numerous costs. They, we've seen it with Sarbanes-Oxley, although it had some good outcome, there was a lot of negative as well. I saw it myself in corporate America through massive layoffs because of costs associated with legislation from a company that was not doing anything incorrectly to begin with. And unfortunately, in this particular case, some of the things that even John McCain's requiring are going to require that the mortgage servicer write down and retire an existing loan, replacing it with an FHA guaranteed loan. And one thing I would ask all the listeners is, as a taxpayer, do you want to be holding bad loans? That's not necessarily a great investment. You probably wouldn't be out there actively seeking out bad loans to buy yourself, so why should the government be buying them?
That's an excellent question. We heard a similar line to that. Peter Schiff was on the program a couple of weeks ago, and he was talking about some of the things that were happening, and he's got this prediction 10 years before the housing recovers, and we know Peter, right?
Yeah.
But one of the things he did say makes sense, and you're saying it again, is the legislation is stalling the recovery in the markets.
Yeah, I know many brokers and many lenders, some of whom have been with companies like Washington Mutual for 30-plus years that have recently been let go. They've changed companies, and they're finding that the organizations are so afraid to make any change or to qualify any borrower. Myself, fully qualified borrower, 20% down payment in a non-declining market, went through 12 banks before I could find someone on my recent home purchase. That's ridiculous. That's not going to help the home recovery. Out here in California, 30% of sales so far this year have been foreclosed upon homes.
Right, and we're hearing higher and higher rates all over the country, too.
Higher and higher rates, particularly on jumbos, and we also know that since the beginning of this year, the group affected more, in sharp contrast to last year, has actually been prime borrowers as opposed to the subprime, which is what was hit last year. This year, we're seeing the prime borrowers take a toll, and that's partly because they cannot refinance with unless you fall under the FHA conforming limits.
And Dr. Dani, I was unfortunately, I lived through the 80s and the debacle of the housing industry back then. And I bought my first home, I got a deal on a mortgage, and it was 17.5%. I got a deal. And back then, nobody came in and bailed people out. Yeah, there was a Resolution Trust Company, and the FDIC did some auctions, but things were hurting bad back then when mortgages were 18, 19, 20%. Why is it different now? Why do they feel like they have to step in when we know the statistic only 4, 5, 6, 7% of all mortgages default anyway? Right. Why is there such an urgency to like you say, redistribute wealth?
Yeah, that's an outstanding question, and in my opinion, also hinder recovery. I think that the reasoning behind it is people are panicking. I think that there's an intentional, I would say, goal on the part of the Democrats to come out and blow up this as a bigger deal than it is. No doubt it is affecting a lot of people compared to, say, 2004, 2005, when rates were exceedingly low and people were paying their teaser 2.25% rate. However, we have to keep in mind, exactly as you said, that even in the subprime market, it's a little bit more than 5% this year are in some state of foreclosure, and in general, it's about 2%. So it's not a significant problem nationwide, and we also are seeing pockets of recovery.
And I wonder, when I look at this, is it in some way tied? It just happened to have a perfect storm here, where this is happening during an election campaign, where it becomes fodder and almost a pandering to people to get them to vote a certain way in order to be the knight in shining. Not well in this one. The knight in the dark horse, but the white knight. But I can say that. But you understand what I mean? Is it a way to look like you're the person coming in saving the day? You're Dudley Do-Right at this point.
Yeah, I certainly think so. And, it's not a secret that I'm a Republican. I have John McCain's picture with he and myself at an LA event in Los Angeles. But, I think that we have one particular party, the Blue Party, that is out there singing the blues and telling Americans that things are going to continue to get worse, when reality is, if these politicians keep their mitts out of private finance and the markets, it will recover on its own. And I think that if I very rarely disagree with Mr. Schiff, and he and I have gone head to head on television shows, and he has a very strong loyal following, as I found out in the blogs. But one thing he and I agree on is that the recovery is going to take significantly longer if the government keeps their hands in the pie. And besides political pandering, I'm not sure why there's such a strong need to do that.
Well, maybe they look at it and say, how can I say this without? I'm going to be delicate.
Oh,
here.
no,
I'm going to be very delicate.
He's trying to be
here.
political correct.
I personally, Doctor, am in the smallest minority. I'm a black Republican, so I'm that guy who really gets outcast at meetings there. And one of the things I look at, and I have had a very strong problem with the ability for the American public to understand the motivation that goes away when you have entitlement programs. And I watched my mother struggle when I was a child. My father wasn't there, and she struggled, worked, got herself back, and put all five of us through college, and it worked. We didn't need a welfare. We didn't need food stamps, and I say that because I'm not the one who was taking care of us, but I don't know all the struggle she went through, but I know she didn't have to get a welfare check. What happens when the rest of the public says, hey, listen, these people are skating, and I say skating because if you took out a loan that you couldn't afford and you want to blame it on a bank that came out and made you sign this document, it's not my problem to have to pay for it because nobody's doing the same for me.
Yeah, well, first of all, God bless you and your mother. I think that what you bring up is a fantastic point. All we're going to do is create an even stronger feeling of inequity, but I think it's going to start to be reversed, and I think that many of us in the quote-unquote above $250,000 category that are apparently quite rich are going to continue to be beaten up. I think that the Democrats are going to continue to do that throughout their entire convention, and they're trying to create this feeling of us versus them, when in reality we know that 80% of jobs are created by small business entrepreneurs with less than $10,000 to start up, that the most successful people are those that pass on the values of hard work to their children. And we also know that these quote-unquote very bad lenders created the highest home ownership among minority groups ever in the history of our country. And that's partly because they were able to get in with low down payments, and they were able to prove basically as hard as they could work and as much as they were willing to work is as much home as they were able to afford. I mean, the banks, yeah, they did have loose lending standards, but there are a lot of people that benefited from that. And I'm very concerned that we're going to create this feeling of a welfare state where everybody, I mean, why work hard when you're going to get, if you get exactly the same or pretty close to the same outcome when you don't?
Now, it's funny you say that because you're talking about buying your own home, and I'm sure you're probably aware of an organization called NACA, Neighborhood Assistance Corporation of America. You familiar with them?
Oh, yeah.
All right. I'm on their website right now, and I'm appalled. Barry knows I've kept this website bookmarked. And I'm reading what's on the top right-hand above the fold post that they have, and it says, quote, 5.625% fixed 30-year mortgages, no down payments, and no closing costs. Why do they get that and we don't?
Well, that's a really good question, particularly when, in general, they have lower FICO scores and they're a higher risk borrower. That's a very good question. I'm not the type of person that thinks that we shouldn't give people a second chance in this nation, but I also think that we need to keep things equitable and reasonable, and we need to not disincentivize people to work hard. And when we run into situations, when I see the government and Ben Bernanke, and unfortunately even, my candidate for president, saying things like, we need to bail people out, which essentially a bailout, if you're requiring lenders to write down a loan, is a bailout. Right. It saddens me, and it's very worrisome for the marketplace going forward.
Wow.
Well, we got into. Everybody knows why we got into this mess. One of the huge reasons is the lax lending standards from everybody out there trying to make a pile of money and then sell the securities away. One of the big problems, there's actually Lawrence Yun from the NAR was interviewed, and he says probably the number one thing that's keeping the economy or housing market from coming back today is the tightened lending standards, especially from Fannie and Freddie Mac. How do you feel about that?
Yeah, I do agree with that, and I rarely agree with NAR, but I think that they have some fairly biased statisticians working over there. However, I think in this case there's some validity to that. When we have organizations and the federal chairman saying that we have to prohibit lenders from issuing loans that borrowers cannot repay, literally prohibit them, but we have no accurate way of assessing this, including the traditional FICO, that's definitely going to play a role into housing recovery. A lot of people are very highly qualified, can't get loans because the stated income loan has gone away, but then in reverse, people who are not so qualified but have a great low-paying job and a low FICO can, under government programs now, get some assistance. And the more we pile on Fannie and Freddie, we've seen what happened to their stock price. Now, of course, the SEC pushed through their application to become a full-fledged public company when things started going awry. And, I just think that's a big problem.
Well, some are saying that it was Fannie and Freddie's plan all along with the housing market to get that passed through, that this is the reason it happened, so they could make that pass that legislation through.
Well, I don't know about that. I'm not so much a conspiracy theorist, but I do think that it's entirely. It wouldn't surprise me. Nothing surprises me in this market.
Well,
that's for sure.
What I find funny when I talk about this NACA organization, and I'm talking about this as a black man reading it, if a white organization did the same thing, hell would freeze over. I mean, part of the reason or ability for you to get a mortgage with no credit, no down payment, no closing costs, is that you have to agree to show up at 5 political rallies per year. And I don't understand why this kind of thing, and you're in the media, why isn't this kind of stuff exposed? Why is it the Republicans on the backside of things always lay down and don't want to be the party to stir it up? And I think it's time, especially this year with a formidable opponent that McCain has, that it's time to stand up and start exposing some of this stuff, no?
Oh, completely. I mean, excuse my crassness, but the Republican Party needs to grow a pair. We have a really big problem with this in this nation. I think that the Republicans are afraid of being deemed racist or being deemed anti-minority or anti-poor people, And so they just don't do anything at all and don't react when stuff like this happens. And it's wrong. The media needs to cover it. Of course, I also think we have a very far left-leaning liberal media bias. And, those things all coupled together with a bunch of media obviously in the tank for one particular candidate, I think it's just right for that to occur.
Yeah.
Well, John McCain, let's play a little game here. John McCain comes along and says, Dr. Dani, I'm bringing you on board to my staff, and I want you to come up with a policy statement for the housing industry and the housing mess and how we're going to fix that. What are some talking points that Dr. Dani is going to come up with for this new initiative?
Do nothing, do nothing, do nothing. Stay out of doing things like requiring escrow accounts for high-priced loans, which is actually creates the inability to generate wealth for individuals that have over jumbo loans, basically. Stop trying to ban repayment penalties or prepayment penalties. I would say that my talking points would be to be more concerned about inflation, or at least try to balance inflation with interest rates, and not try to pander to people who are freaking out about a quarter of a rate reset, to allow the housing market to recover on its own, to provide a longer discount period or a longer discount window if that's necessary, but not to specifically help out particular banks or to require that a specific bank not go out of business, to avoid public fear, to just be straight with the American people and tell them exactly why this is happening, that it's not all the bad lenders' fault, and to finally have some positive press about what has actually taken place over the last few years and not just all the negative.
All right, you're hired. We're going to get the McCain camp on the phone and make sure this happens, okay?
Please do. Okay.
All right, stand by the phone on that one. One other thing, you've got a new book coming out towards the end of the year, The Accidental Landlord, right?
Yeah, that's right.
All right, well, tell us a little bit about that book, because this is what we see in the market. Business Week just did an article we talked about earlier on the show that says the searches for real estate are doubling and quadrupling in cities where the highest foreclosure rates are. So we know those buyers are coming back into the market looking for deals. We're investors. We're back in the market looking for deals actively right now. It's a landlord mentality, it seems like, right now. So your timing's impeccable, by the way. What's the book about, and what are some advice for the landlords getting started out there?
Well, the book is about, it's written for people who are in one of two situations, or either have a home that they can't sell on time, and they need to move out quickly and want to rent out the home to either sell at a later point or move back into, or for those like, both of you and myself, investors who are looking to basically be in a hold position until the market recovers, which undoubtedly it will. And, the book basically walks those individuals through both the two methods of landlording, becoming a landlord, which is to use a property manager, or to do it yourself. The pros and cons of both of them, the steps that you need to take to ensure that you're within compliance within each state and each county. Lots and lots of forms from the Landlord Protection Agency, which is a great organization that even allows private landlords to run credit, to report to credit, and great advice forms for other individuals to share information and advice. And it's basically just designed to walk you through step by step what to do if you either have to or want to rent out your home.
Well, one of the biggest impediments I'm seeing in the market right now is trying to get, and God love them, they just don't know what they're doing sometimes. The real estate agents out there that just aren't used to dealing with us crusty old knowledgeable investors. What are some advice you can have to those people out there, the agents out there? Is it just basically get out of the way, collect the money at closing, and just keep your mouth shut?
Yeah, you pretty much summed it up for me.
Okay.
I'll tell you, I have my agency license to represent myself, friends, and family, and help them get their 3% back, but not to go out and represent other people. I think that the entire quote-unquote realtor in particular, not necessarily agents, but the realtor, the NAR organization, is corrupt and is a giant lobby organization. And in general, they don't have the homeowners or the realtor's best interest at heart, and they do a lot of spin, just my personal opinion. And thank God for the First Amendment in this country.
Say it, girl.
And, I think that most of the realtors, we know today that 80% of the time a client comes to us, I say us being a realtor, with the properties that they want to see and most of the details about the home. And so what the real estate agent is doing today is very limited, although I hear them constantly argue the opposite and slam doors in my face and, hang up phones and return books and so on because they disagree, and that's fine. But one thing that they can do is unbundle their services, and I've been a big proponent of that for a long time. So, for example, if I have a client, and I were actually out there representing clients that wanted to buy a home, and they had already done, 50% of the research, I'd either offer them a percentage back or I would unbundle my services if I were going to sell their home for them. So if I were going to do open houses, I might charge a flat fee of $2,000. If I'm going to do print advertising, a flat fee of $2,000. Why should the realtor benefit from increasing home values, or on the opposite side, not benefit when they decrease, when the work level is the same regardless? We saw a lot of realtors get very wealthy throughout the early 2000s, benefited greatly without really having to do a whole heck of a lot. A lot of them are whining like crazy now that their income's dropped. I don't know what they expected.
Right.
And, unfortunately, I think the only way to move forward, and I said this 3 years ago in my first book ever, Commissions at Risk, is that they needed to unbundle their services and realize that not everyone wants a full-service firm.
And we're starting to hear that more and more. The question we often ask real estate agents across the country is, if I've got a $100,000 house and the 3% is $3,000, what do you do more for my $350,000 house where you're making almost $10,000?
And the answer is either or nothing, right? Right, it's higher-end magazines.
Yeah. Boy, that print advertising is really expensive.
Yeah, and to everybody listening that wants to sell their own home, as I've been doing for many years, long before I had my agency license, is look at yard signs. They're still the number one way to sell a home. Between that and the internet, you can pretty much do it yourself. You can get the forms online, or just contact a realtor and be willing to give them a few $100 for a form. Many of them will do that today because they're pretty hungry for business.
Yeah, there are some flat fee listing services out there right now.
There are, absolutely. And, I got a lot of hits on my home that I sold over in the beach community here in California off of Zillow, which is another great alternative that I think is really going to give agents a run for their money. Absolutely. Well, Dr. Dani, I appreciate you joining us on the program today and spending so much time with us. Always a pleasure. Thank you. All right. Well, hold on just a second. We'll take you out. And that's Dr. Dani Babb, everybody. And you can get her at drdaniellebabb.com. We're going to have a link to that from the website, okay? Barry, let's go ahead and take a break on this, and we'll be back right after this.